Let's rethink trade areas for self-storage. Let's talk about some unique metrics that you might not be thinking about as you're looking at a particular trade area to do a self-storage project. My name's Mark Helm, and I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Quickstart Academy, which houses the training that I offer. It also houses the on-demand self-storage bootcamp. That's the premier training I offer that takes you all the way through from point A to point Z on how to put a self-storage project into service from whatever point you're at right now. As I'm recording this, which is towards the end of the first quarter 2024, if you purchase the on-demand self-storage bootcamp, you'll be able to participate in the follow-ups for 2 months at no additional cost with the people who just completed the live virtual boot camp. You can find out more about it at Creating Wealth Through Self-Storage. Go to the store and look for On-Demand Self-Storage Boot Camp. But I've been on my soapbox for years talking about how square foot per capita might not be the only or the best metric always to use when analyzing a trade area for self-storage. Yes, it's important. Yes, you got to know it. And if you've suffered through my rants before, I apologize. No rant today. I was in the self-storage boot camp having this conversation, and I was asked, well, what are some of the metrics then besides square foot per capita that you look at? And I just off the top of my head said the usual suspects like, well, I look for population and population growth and good income. I want to be at the median to up, I don't have to be at the upper end, but median or up, not medium or down in the income levels for that particular market. But what's true is I really look at some other kind of unique metrics, and I want to talk about those in today's episode. Now, of course, every trade area has its own demographics, its own economic and spending trends. Each trade area is unique unto itself. And here's some metrics when I'm comparing doing one deal or another and I'm looking at trade areas. Here's really what I'm looking at. I'm interested in square foot per capita, but let's say I'm looking at 2 trade areas where square foot per capita is 7 or 8 square feet per capita. Now, in traditional thinking, that might tell you it's at equilibrium. Depending on what part of the country it is, it very well could be well undersupplied. It just depends. If I'm, let's say, at 8.5 square feet per capita, but all my competition is full, no one's doing any discounting, I'll look at some other factors too. And usually here's where I start. First thing I look at is self-storage rental rates. Nothing surprising here, but it's really, I'm surprised how many people don't start here. Why? Well, there's a lot of information in rental rates. Now, there's a conversation, and it's a valid one, that the rental rates you get off the websites are not the effective rental rates that many of these companies have, and that's absolutely true. You may have suffered through some of my rants on that. But I start with rental rates. Why? Well, because construction costs are high. Now, I'm really coming in low on some of our construction projects, really on the chopping block with a lot of stuff, and I'm at $75 a square foot, maybe $80 a square foot sometimes, depending on the market. And I'm pushing it. Now, I think very simply, so let's think simply about it. Let's say I'm buying an existing self-storage facility at 25,000 square feet. I'm doing another 25,000 square foot expansion. I'm spending $75 to $80 a square foot on that 25,000 square foot expansion. So for a 10 by 10, that equates to about $7,500 to $8,000 construction costs to put a 10 by 10 into production. Now, if my profit margin's 15%, and it's costing me $7,500 to create that unit. Now I want to get a 15% cash on cash returns. That means that unit needs to be $1,125. Here's the math. That equates to a $93.75 rent to get that return, and I've also got my land cost or the cost of the existing facility that I'm buying in there. So for all practical purposes, today I need to be at $100 for a 10 by 10 to make it worth my while to consider adding more 10 by 10s. Yes, I might take other factors into account, and I might accept something where the 10 by 10 is going to be less than $100, but probably not. There may be some circumstances where I do it, but most likely not. So I start there with what are the rental rates. That'll tell me whether it's worth my calorie burn to build that 10 by 10. I can put a 10 by 10 anywhere theoretically, and it's going to cost me about the same theoretically. So the higher the rental rate, the bigger the return on my calorie expenditure. So I start there. Here's another unique metric. Let's look at the affordability cost metric. This is a way to quantify and compare trade areas to trade areas and look at how affordable our self-storage is going to be comparing area. Here's how you calculate the affordability cost metric. You need to know what the average household income is in your trade area. You can get these usually off the offering memorandums that come out if you're buying an existing self-storage facility, or you can subscribe to services, or you could just Google, put a zip code in or put an address in. But I subscribe, and I can pull demographic information up, and I always pull that information up and look at it. So I'm doing a 2-story climate-controlled expansion in a trade area out west. And in that trade area, as I bring my 10 by 10s on, these climate controls, I'm going to be charging $115 for these 10 by 10s, at least coming out of the chute. That's what we're going to be offering. Probably going to go higher at some point soon, but the day we open, my 10 by 10s are going to be $115 per month. In that particular trade area, within a 4-mile radius, the average household income is $88,028. So I take that here's the math. I take the 150,000 times 12. That equals $1,280. And I take that 1280 and I divide it by the average household income, and I come up with 1.6%. According to the 2023 Self-Storage Almanac, if the cost of occupancy for self-storage is below 3.5% of the average household income, that storage is an affordable commodity in that trade area. So theoretically, the lower the affordability cost metric, the better. Not always, but theoretically, I look at that. So as we were considering doing this expansion, we were at what looked like on the surface equilibrium in that trade area at the square foot per capita number. But all the competition was full, no discounting going on. So I was trying to decide if I wanted to put my boat in to do an expansion. So I started looking at some of these other metrics. 1.6 isn't a very affordable product to be bringing online in that particular trade area, and it appeared like if there was a shortage of anything, there was a shortage of climate-controlled space. Housing costs, or more specifically apartment rent, compared to storage. And then I translate that apartment rent over into housing costs. In a perfect world, I'd like to see apartment rent much higher than self-storage rent in a particular trade area. So in the trade area I was just talking about in that Western market, the average apartment rent in 2023 was $1,182, and the average apartment size was 721 feet. Here's the math. $1,182 divided by 721 equals $1.64 a month, or $19.68 per year square foot cost. We're bringing, after I put our unit mix in, we're bringing our new self-storage on, coming out of the chute, at $12.74 a square foot. It'll probably go higher, but it's going to go $5 higher. So our self-storage rent is well below the cost of apartments. And I like that. Why? Well, when people start getting crowded and need more space, it's cheaper to rent storage than it is to move and get another apartment or a bigger apartment or a house. Storage is a cheaper option in that trade area. And that is a good driver for self-storage demand. I also like looking at educational levels. Why? Well, when times get tough or if the economy changes quickly, I've discovered that the higher the education, the more resilient that particular trade area is in being able to generate income faster. Now, I don't have an exact metric that I use, but I want to see where this trade area is educationally compared to the rest of the country. If it's below it, it's not that I won't do the deal, I'm just aware what's going on in that trade area. So in the particular trade area I'm talking about, 88.3% of the people attending high school graduate in that trade area. The national average is 87%, so this trade area is a little higher than the national average. Then I looked at attending college. In this particular trade area, 39.7% of the population has college degrees, compared with 33% nationally. So it's a more educated trade area. If there's a sudden shift in the economy, an employer moves out, something happens, my guess is that the population in this particular trade area will be more resilient and be able to generate new income faster because they have a higher level of education. That's just an assumption I'm going on. It's a metric I look at today. Now, I don't make my buying decisions solely on these metrics, but if I'm comparing two opportunities, I will lay a chart out and see which trade area I like better, where is my storage coming in affordable? Is it a highly educated trade area? Are the rents going to be enough to give me at least the benchmark return I'm striving for on my return to do a deal? Those are some of the metrics I look at if I'm comparing trade area to trade area, or if on paper it looks like we're at equilibrium or maybe slightly above, but if I look into the market I can see no evidence of that, then I'll weigh these factors a little more heavily. Those are just some creative metrics you can use. It's not an exhaustive list, but I invite you to really think through what are some metrics you can use as you're looking at trade areas. I hope this conversation expands your thought process on what could make a good trade area up, and most importantly, as you're looking at this, have fun. There is no perfect location. There is no perfect deal out there. You've just got to weigh the options and make the best move you can make given the information you have, and have fun with it. It's self-storage. So thank you very much. I look forward to being with you next week, and I will see you then. This is Mark Helm, author of Creating Wealth Through Self-Storage. See you next week.